It's really the end of November. There are still tons of moves that you can make now to save money at tax time next April. We're going to discuss a lot of them. We're going to show you a slide presentation that gets into some of them in detail. And you may say, well, November, it's really too early to adjust your taxes. And I say to you, no, it's not. It's probably a year late, because your 06 returns should have been really started to be addressed a year ago in November of 05. It should have started for sure November, December of last year. It is more complicated this year, and it's more complicated because the tax laws have changed, and they changed once again. The tax laws have changed for 40 years out of the last 43. So the only thing constant for sure is that tax laws are going to change. But there are still some additional moves you can and should make before December 31st to trim your tax bills. Some of them are simple. Some of them are more complicated. Some of the things you need to address are and the easy stuff, charitable deductions, flexible spending accounts if you have any of those. Make your mortgage payment early. Make your January 07 mortgage payment in December of 06. Pay some of your real estate taxes early. You look at your medical and miscellaneous deductions, see how the floors work, whether you should combine those deductions in this year, whether you should maximize any of your IRA contributions, how you take distributions from your IRA accounts. Take a look at your capital gains. You'll hear about kiddie taxes going up this year. So all of these things you need to pay attention to. You need to at least use those calculators on our website and put in some different scenarios for yourself. If I made this deduction, if I took this into income, if I deferred this income, and see how you look. It's not too late for those of you either making estimated payments. You have one estimated payment left in January. Those of you who are still receiving W-2 forms, it is not too late to go and change the amount of the estimated payment that you make and or change the amount of withholding you take for the Christmas holidays. You know, to get a refund is not the goal. The goal is to have come to April 15th of each year and file your return on April 14th or 15th, and you have a zero amount owed and a zero amount of a refund. That's the perfect world, and that should be your goal. The idea of having big refunds or any refunds, as a matter of fact, really might be counterproductive, because it just is taking money out of your pocket and you've made an interest-free loan to the government. Not that they can't use it, but certainly it is an interest-free loan, and I'm not so sure that you should be doing that. So adjustments early on in the year, and actually quarterly for those of you making quarterly estimates, are important. So that's why this subject and tax planning in these areas is going to be ever so important as you go forward, and because it's your tax dollars, it's your money, you're the people writing the check, or you're the people with the deductions coming out of your paychecks. So if you can skinny those down and take a look at exactly what is going on in terms of what you're giving the government and how you're paying the government, those are things that you need to do. I think last year there was about 102 million refunds, and the average refund was somewhere in the neighborhood of $2,200 each. Well, I can't do the math. I ran out of fingers and toes long ago, but that's an awful lot of money to leave on the table on an interest-free basis, and I'm sure every consumer could use that in their pockets on a weekly or certainly a quarterly basis. So that's one of the overwhelming reasons why you want to do some tax planning, and why you want to make sure that you know where and what direction your taxes are going.